Hi, my name is Kem Washington. I'm a certified public accountant and a former Internal Revenue Service agent. And today I'm going to talk to you about the 10 most overlooked deductions that people do not take on their tax return. So the first tax tip is the bad debt expense. This deduction you can take, let's say for instance, if an individual owes you money, you actually can deduct it on your tax return. So there are some different qualifications, so please feel free to go to irs.gov. But some things that you should just be aware of, it has to be a legitimate debt. It could be something, let's say for instance, you're saying, okay, this was my friend, I gave her a certain amount of money, now I want that money back, and so hey, I think this should go on my tax return. That can't happen. It has to be legitimate. At the time that you gave this money, this person had to also know that, hey, I'm also receiving a loan as well. So if you qualify for these different things, you may be able to take it as a deduction. But be careful, again, you want to go to the irs.gov website and find out additional information regarding this tax tip. The second tax tip is the IRA deduction. This amount, if you put some money away for retirement, you can actually take a deduction on your tax return. The great thing about this is that you have until April 15th, until the year that you're actually filing your tax. So you actually have up until the day that you file your taxes to take on your tax return. So for more information, please feel free, visit your financial institution or go to irs.gov and set up that IRA for future deductions, and you can actually take it on your tax return. Another commonly missed deduction is what's called move-in expenses. If you move from LA to New Orleans, or if you move from New York to Texas, you can take the move-in expenses on your tax return. Of course, some qualifications, it has to be at least 50 miles. You also have to be moving for a job purpose. So let's say, for instance, if you receive a new job or if you're self-employed and you decide that you want to relocate your business, you can take this deduction. Of course, there are many other rules, so please feel free to go to irs.gov as well so you can find out the different rules and how it applies to your situation. Tip number 4, of course, everybody loves to give their money and their time to a charitable organization, but there's some things that you can actually deduct. For instance, let's say, for instance, if you're a chef and you decide that on Saturdays that, hey, I want to feed the homeless. Well, what you can do is you can deduct the amount of food that it costs you to prepare the food for the homeless. You also can deduct the mileage that it takes from your home to the homeless shelter as well. So these are some things that you can deduct on your tax return. And of course, as you may be aware of, you can deduct the money that you give to a charitable organization. Tip number 5, of course, if you are deciding to go back to school or if you have a dependent, there are many different educational credits that you can take. Particularly right now, it's called the American Opportunity Tax Credit. This credit could be used if you are in school for the first 4 years, and it actually is a refundable credit. So that means you can actually get money back into your pocket. Tip number 6, let's say, for instance, if you finish college or if you didn't get a chance to finish college, but now you're paying back on your student loans. Well, you do know that you can also take a deduction for your student loan interest on your tax return. So remember, this is an AGI deduction, so you take it before AGI, and it can actually reduce your tax liability when tax time comes around. Tip number 7, if you're out of work right now and you're looking for employment, you can actually take some of these deductions on your tax return. Of course, you do need to itemize, but expenses such as printing out your resumes, business cards, and other types of expenses, you can actually take it on your tax return as a deduction. So for more information, visit irs.gov so you can find out if it applies to you as well. Tip number 8, if you have children and they're under the age of 12, you may be able to claim this deduction on your tax return. This will be in the case that you are working or your spouse is working and you need for someone to take care of your kids. Then you can pay that person and take this deduction on tax return. There are some different rules, such as number 1, you cannot pay someone who actually is a dependent on your tax return. But if you're paying a third party, such as a babysitter or a school, you should be able to qualify for this deduction. So for more information, again, visit the irs.gov website to find out if you actually qualify for this deduction. Tip number 9, you can actually take a child tax credit on your tax return. If you have a qualifying child under the age of 17, you can get $1,000 per child and you can claim that credit on your tax return. For more information, please feel free to go to irs.gov website. And the last tip is the earned income credit. Of course, individuals, you may know what this credit's about, but the good thing about this credit is that it's a refundable credit. So unlike other credits that reduce your tax liability, a refundable credit, whether or not you owe any money, you can actually get extra money into your pocket. The earned income credit, just as the name implies, you have to have obtained some type of earned income for the year. You're able to claim it if you have children or even if you don't have children, but the higher amount that you will receive is if you did have children. So the earned income credit is another overlooked deduction, so make certain if you qualify, this can really boost your tax refund, so make certain that you're able to deduct it. If you have any more questions, please feel free to visit my blog at Kimberly.com or visit irs.gov for more information. Thanks and have a great day.